Are there any other tips people can use to kind of ride out this storm that's inevitable?
Absolutely. So first, we already talked about don't panic. Problems are opportunities. We didn't talk about mortgages, but the fact is Britain is going to have to stimulate its economy. And one of the ways they're going to do that is by lowering interest rates. And if we look at how interest rates are performing over here, what you're seeing is a rush to safety, people wanting to go into treasuries in the U.S. because we are a safe economy, right? So stability is what they're looking for. Secondly, I believe that the main reason so many people panic is because they don't even know what's in their 401k. Right. So the next tip I want to give folks is get a little bit more knowledgeable about what I just discussed, and that's where your investments are in your portfolio. And then the other thing, the best thing any investor can do is be diversified between stocks, bonds, and cash. Because what you can do is you can reduce the amount of volatility in your portfolio by having different eggs in different baskets. And the other thing is, within those baskets, you need to diversify. So I just said have your money in stocks, bonds, and cash. But the other area that I think our viewers need to really focus on is being invested diversified even within those asset classes. So even if you're in a stock mutual fund, you need to be diversified between small, medium, large cap stocks or mutual funds that have those asset classes in them. Because the one thing I want people to really understand is that in all economic cycles, somebody's making money. And so the way you participate in that really is by having your different eggs in different baskets. So no matter what the economic cycle, you will be able to take advantage of it. And in the long run, you'll be able to build wealth regardless of what the ups and downs of the market.
Well, you certainly make us feel very confident. But when you hear that $3 trillion was just lost somehow in the market, should people really trust that they can either enter the stock market now, enter investment strategies, or should they wait?
I say the time to invest is when you have the money, basically. But how do you do that? You take calculated risk. So would I suggest that anybody, if they're sitting on a pool of cash, invest in the market right now? Right away, all of it, no. But what I would say, one of my other tips is to allow volatility to work in your favor. And the way you do that is by systematically investing. So you hedge. So let's say you're sitting on $20,000 in cash and you really wanted to put that in the market. Well, you'd be surprised. Many people don't know. Going back to financial acumen, I'm surprised by the number of people who do have a significant amount of their retirement investments in cash. Should you put it all in at one time? No. What I suggest is if you're sitting on a lump sum of money, maybe you take $10,000, you put that $10,000 in now, and you put that next $10,000 systematically in $1,000 at a time until you've position yourself all the way in the market. I cannot say this enough. Problems are opportunities, and we didn't lose anything. You don't lose anything until you actually sell. So I always laugh when I hear commentators, oh, the market lost, it just wiped $1 trillion away. No, it declined in market value. So let's see where we are over the long term and not get so, how can I say, hype kind of makes people interested. So.
Well, Deborah, this was perfect. Thank you so much for all the insight. And for all of you out there, don't check your 401 accounts yet. Wait a week.
That's exactly
Thank you, panel, for being here today. I really appreciate all of your